Portfolio Builder members, today's update will start off with a review of our open positions, and then we'll jump into some of the more topical content. And I think the big theme that's going to get really front page news in the upcoming 12 months is going to be anyone who has ties to China, and especially some of the civil rights violations that China's pressing upon its people, mainly from censorship, but also something they've called this social credit system. The trade alert we put on this morning was to sell to open the June 19, 2019 290 call option. And the main way we make profit from this is by holding it until near the expiration, which is this Wednesday, because the time premium evaporates, and meanwhile we get some downside protection against our position. So this went up about 28 cents today because we paid we received a credit of $1.29, and we could close it right now for $1.01. Of course, we don't want to do that. And at the same time, the SPY has gone down by 30 cents, so we're basically break even on that. The hedge we're investing in, we're taking part of the profits from this trade, which I anticipate will be around 45 cents minimum per contract. We're taking some of the profits from the covered call, and we're investing it into a further out expiration put option on FXI. Now that's China's large cap ETF, and I think this will take a little longer to play out than everyone anticipates, but that there is some tremendous downside in the cards for China's ETFs products, which I believe will be exposed as supporting a dirty regime in China. And so I think there's a huge downside risk to owning these Chinese ETFs. So that's how we've got this playing right now. If the SPY travels much lower, we'll buy to close this covered call for a profit and sell a new covered call for more money and get extra paydays. As long as the SPY stays flatter up, we're going to generate a nice profit on the call option and owning the SPY. And so our idea is to take this short-term cash off the table from call option speculators and then to flow it into a longer duration leveraged put option on FXI. So that's the current trade alert we have in our basic program. Now our diamond program trades on Tuesdays, and this was the potential profit of 43 cents. The big payday on this is catching a surprise to the downside on Apple. But if we do make 43 cents, that's enough for a 10% annualized return. So if Apple goes up, we get our maximum profit on the covered call. Then this put option goes to close to zero. We make a minimum of 10% annualized, or $43 contract, although we may make a little bit of our money back on the put option. What we're really trying to accomplish with this trade is to catch a little more downside risk in Apple. I believe this stock has the most exposure to the US-China trade war, so that's how we're playing this short-term risk in the trade war escalating and Apple being under threat. So currently in this trade, we have protection down to the 187.50 level. And we sold this covered call when Apple was trading at 194.55. And so this trade does very well for us if we just trade flat, slightly down, or up, or also if we crash really hard. That's kind of the various outcomes. And so this trade is sitting pretty with Apple trading at 193.89, very close to where we wrote the covered call, and nowhere near where we wrote our strike price, which was at 187.50. So we're sitting on the maximum profit potential on this in terms of a positive outcome for Apple. Now, this is a small teaser. If you are in our basic program, you get a free 30-day trial to our Diamond Trade Alerts. This is a teaser for what I have in mind tomorrow. And if you're just on an active trial, you haven't bought the basic program yet, you won't get this trade alert at all until you do upgrade to the basic program. But we're doing a very similar setup, except we're moving the strike much closer to the trading price tomorrow. So we still will have some downside protection, but not quite as much, which means we're going to have a juicier profit in the call option. And then we're going to reinvest in half of the potential profit into a put option, and the other half is going to go into a long gold position. And so I'm expecting the Fed is going to hint at lowering rates and printing money, and I think gold will be off to the horse races as long as the trade war escalates. And so we'll take a look at why I do think that's what happens next. Now again, these are not the final prices or strikes, just to look at how we're playing it. The shortest duration trade is the Apple covered call, which will be expiring June 28th. The put option will have an extra duration to July 5th, and then the GLD call option will be way out to July 19th. And so that's kind of the setup we have to really juice up the profits in the diamond level membership with a lot of downside protection and safety going into this trade setup. Now, the Whale Club is going to consolidate out of Google this week. We are hitting our max profits. Same setup on these. The Google play was annualized at 25%, or $491 a contract. And this will happen as long as Google stays up around anywhere near that 190 price. And so you can see right now we're trading at 192. So this is a trade setup that makes the same no matter how high Google goes up because we've sold that covered call. So we're limiting our upside, but we're dramatically reducing our downside risk. So the Google play will hit its profit. We're going to get out of Google Thursday and be playing exclusively Amazon. But rather than buying the put option on Amazon, you'll see something exciting about how we're going to buy a put option and a call option with the profits we make selling a covered call on Amazon on Thursday. So this will make it easier for Whale Club members to follow the program. But we're going to be playing the upside potential on Amazon with a defensive covered call, and then hedging against Alibaba, which is a Chinese ripoff of Amazon. And although we know Trump and Jeff Bezos aren't buddies, I think Amazon's on better grounds for the trade war, really than any of these other super competitors in the S&P 500. So Google has some definite ties to China and deal flow that has to revolve around censorship and some pretty questionable ethical problems, which is sad. And I think that is the reason why it's nowhere near its highs right now, like Amazon's rebounded so aggressively. And I think it's going to have some potential stir-ups when people start to realize that they've been doing some business with China. And in fact, there's been engineers at Google who've been protesting on various projects that are definitely questionable ethically, as well as a lot of censorship that they've not only been doing in China, which isn't even supposed to show their search engine officially, even though it's still the 11th most visited website in China, but also censoring search results in America. So I think this will be a very hot topic. And at the same time, Alibaba's everything is under threat. So I think we want to hedge with the Alibaba and can make some big profits in a collapse in that company, which I think is going to have some serious trouble ahead if the trade war tightens. So we'll get into that in a minute. But in general, both these trades are, because the market's been basically flat, slightly up, they're at their maximum profit in a good scenario for the underlying asset. And come Thursday, expect to roll completely into the Amazon, Alibaba, and then long TLT. So I'm expecting the Fed to lower rates And so that's a good setup. So in the Tuesday trade, we're going to be looking at selling a covered call on Apple and buying a put option, and then taking part of the profit and going long gold. In the Thursday trade, we'll be doing similar setup, except we'll be long Amazon with the in the money covered call, and then we're going to have a put option on Alibaba, the ripoff of Amazon in China, and then go long TLT. So I think we may have, and in this program, we're both long and short the TLT. To the short term, I think there's a chance for one more big push up in the TLT, but there's also the risk of the Fed disappointing and eventually raising rates, or the mass exodus of the bond trade if the trade war de-escalates. So I think the TLT is a great product to buy some calls and puts on. Short term, definitely looking at a final push up. Long term, I think there's a big risk of a spike to the downside on TLT. So that's kind of a summary of what we have coming. And if you're still on a free trial and you don't want to miss out on our trade alerts on Tuesday, trading Apple, and Thursday, trading Amazon, call Dean now. If you do upgrade, you'll still have another 7-day refund period. You'll save $1,100 a year because we are raising the price of the basic program to $2,000 a year this Friday. So you can get locked in at $897 a year if you call Dean at 505-322-7515. Okay, so let's jump into the meat of what's going on in the update and why we're starting to get a little more nervous about these Chinese-related entities. And so part of today's presentation is I have some screenshots and a link to a webpage that tracks the government representative and person receiving money or a company receiving money from the Chinese that's over $100 million. So this doesn't even look at stuff under $100 million. This is starting at $100 million and purely in equity purchases. And so the bad news is the Chinese are in bed with Wall Street. So the banks are the number one culprit, taking big money from China. If you think about it, China represents basically just one big entity that, of course, has a lot of different tribes within the Communist Party, but it's a huge account. It's a gigantic account, and of course, the banks want to represent that capital. And so we've seen BlackRock and JP Morgan telling all of America that we need to invest in China. And so all our 401ks, pensions, all kinds of money without anyone knowing it is flowing straight to China. And there's no accountability. There's not audited financials for all these companies. It's a ADR. So we just get a little piece of paper, 30 pages long on average, for any of these types of stock investments. And you really have to just take their word on it. So that doesn't really fly. And if you go try to press them on it, they'll tell you it's against their law. It's against their communist laws to share this sort of data. So you have to take their word for it. And there lies a big problem. So I think that what comes next is the tariffs rise. And until the Chinese give in, which they may not do for years, and if you really start to understand why, you'll realize what they really want is to break up the Communist Party in China. And I don't think they're going to easily let go of their wealth and stranglehold and position in China. And so anyways, Nancy Pelosi's name is on half of the investments. Exactly what her role was, I don't know, but we can see where the cash went to and know clearly that China has their hands on a lot of politicians and a lot of corporations. And so this is a look at the ETF FXI. It has about $5 billion in holdings, and it's purely Chinese enterprises. This most likely represents different tribes in the Communist Party. And so this is where a lot of cash is flowing to these different leaders. So the setup in China is kind of a hybrid of, they have this legal system that they've set up. They have a government. So they have a setup that's somewhat similar to America a little bit, except that it's all really controlled by the Communist Party. And so you got lawyers, you got laws, you've got all this stuff. But at the end of the day, the military is there to protect the Communist Party. And those are just people who have controlled China for hundreds of years and have managed to pass their wealth along from family member to family member. And so they've set up this system where you can go be an entrepreneur and get subsidized by the government as long as you don't do anything to interfere with your kind of like your lord in your various region and sector. So when you look at all the different ETFs out there, there's bigger ones, one with Vanguard, one with EEM is a popular one. At least some of the capital in those ETFs are going to Taiwan, South Korea, and India. But there's a handful of ETFs that are pretty much 100% these Chinese companies. So in a moment, we'll see what some of the issues with China is. Okay, so the first big problem is that we can't audit any of these companies. So we have tons of money pretty much unknowingly going to this communist dictatorship from the banks. You know, their oversight, their products, they're making these very easy to invest in products that have accumulated billions of dollars, and it's all flowing straight to China. And in return, China is putting all their extra cash into the banks to invest in all these different products they sell. So first off, none of this can be audited, so we don't know if they're really making profits or not. So that's the first one. Here's a look at that EEM ETF. So you can see at least there's a little bit of the capital sitting in Taiwan, South Korea, South Africa, India. So that's why I think it'll crash a little bit less if America really starts to put a lot of sanctions against China. The next point I want to bring up is if you do listen to President Xi Jinping's 40th anniversary speech, 2 hours, you can listen to the translation. He really lays out his exact plan, priorities, and they literally think that they're creating a evolution in how to run a civilization. And so they've been implementing a few things. Number one is that they automatically filter about 10,000 different words from all conversations in the digital sphere. So there's no Google, there's supposed to be no Google, Twitter, Wikipedia, any of that. They've ripped off anything you can dream up in America. They've redesigned it for their own personal internet and domestic setup. And so the first thing they're doing is they're censoring anything they don't want you to talk about. So if there's any sensitive word, and apparently there's companies that they sit there and type in these words and see if it will make it across like WeChat or all these different products that are out there that are replicas of what we have in America. And they can identify what is sensitive. In Hong Kong, they have a service where they're searching all these articles about China and looking for which ones the censors remove and creating an archive of what is being censored. That's one thing that they're doing. The second thing they're doing is putting facial recognition cameras all over their top cities. So everybody else, they have 1.4 billion people. Most of them live out in poverty, but if you're lucky, smart, or connected to part of the Communist Party, you get to have a job in one of the big cities. So we're talking 20 to 30 grand a year if you are an average person in one of these top-notch cities. And if you get 5 marks against you for violations like crossing the street, they automatically scan your face. So if you jump across the street when it's a no-go time, that's 1 mark. If you get 5 marks, you're completely banned from all top-tier cities for life. So it's a super strict setup. They also, if you do anything wrong, put your face on a screen for the public to see. So they're doing this sort of stuff to control their population, and there's no way to speak out against the Communist Party. If you do, well, first of all, if you try to, it's automatically filtered. 2, if you do speak out, you end up in a concentration camp. They have 1 million people in concentration camps that they call re-education camps. These are Muslim Chinese people. So it's horrendous, all the things that they're doing. It's all kept secret. If you type in, well, first of all, if you get a secret internet connection in China and then go to Google, you may think you're getting behind China's back door or whatever. Well, guess what? If you type in the Tiananmen Square, it comes up with a bunch of silly photos, even if you use this secret internet in China, and it can be traced back to being located in China. So Google's officially banned, as well as Yahoo, in China, but they know that people are trying to get around them and search about them, so they let it still pop up with the secret internet. And now Google and Yahoo are showing censored results to the Chinese about a massacre at Tiananmen Square, where the entire country was up in revolt in 89, and thousands of people were killed in the streets by the police. Okay, so these are some nasty dudes, and America doesn't know that they're investing in what many are drawing a parallel to Germany's Hitler. But they think that they have created a super society that will outpace democracies. And so they also realize that they can buy out individuals in a democracy and influence the West with bribes. So that's what I'm starting to uncover, and it's really just everywhere. And probably that's the glue holding this market together right now, is that the banks and Silicon Valley to some degree are in cahoots with the Communist Party in China because it's so lucrative. They have a slave population of 1.3 billion or more people that they can put to work for super cheap. Now the cost of labor is going up. The people in China realize that the communist leaders are getting filthy rich, so they have their own problems at home. Here's a clip. If you do join our Telegram chat, there's about 20 hours of footage I watched this weekend on China. This one is about censorship. Winnie the Pooh was characterized as President Xi, and Tigger as Obama. And so there was a period where there was censorship related to this during a period of time when they were criticizing. And this has also led them to create censorship based on pictures too. So not only do they censor words, they're also censoring pictures. So you can't speak out against the government in China. Also interesting was anyone speaking negative about China during the reunion of Tiananmen Square on Twitter quickly found their account deleted. So they definitely have their hands all over Twitter. Any kind of communication technology, their Tencent company seems to have their fingers on. So that seems to be what they're really interested in, is trying to take over the dialogue on the digital world, as well as the internet systems that would create super fast connectivity, which is the 5G network. And there's a huge protest in Hong Kong. Thanks to the internet being so prolific now, they couldn't get away with what happened in Tiananmen Square. Some 2 million people hit to the street, because China was trying to put over some crazy laws on Hong Kong that essentially let them just pull people out of the street, extradite them to China, and do whatever they want, including freeze Hong Kong bank accounts and all kinds of stuff like that. And so if you do go watch lots of documentaries of people who live in the surrounding territories, they're slowly starting to feel the effect of China trying to reach their deep pockets into controlling the business owners and the politicians in all of the surrounding countries. Now, the big event this week is the Fed meetings, and we're all anticipating that they will say that they're still on hold, being patient, but some sort of hint that they might lower rates next month. If they were to be too hawkish, that could be very bearish for the market right now. And really, the market's expecting a hint that there will be lower rates. I expect the trade war escalates, the Fed lowers rates, prints money, China prints money. That's what happens when countries go to war. They print money and do their best to prop up their markets and financial institutions. So it's going to be a nasty divorce. The overflow and overlap between China and America is pretty intense. So this could cause some serious disruptions in the financial system. It's said that China was doing big attacks on Telegram app in Hong Kong, where they're trying to create these rallies. And of course, this is a huge blowback to the Communist Party trying to overstep its power. Huawei is bracing for 60 million smartphone unit sales plunge. This is just a little article about Joe Biden's son having a $2.4 billion hedge fund funded from China. Okay, here is a database of large investments from China that are tracked over 100 million. You can see the representative, and again, I don't know exactly what their exact role is in that, but you can see Nancy Pelosi, Maxine Waters, and quite a few recently. If we go to 2018, we can see some of the investments, but some of the more notable, of course, Snapchat. And if we go back even further, we can see $3 billion given to Blackstone, $5 billion to Morgan Stanley, another $1.2 billion to Morgan Stanley, some $2.3 into Chesapeake Energy. So they really have their hands in a lot of pies. Activision, JP Morgan for $730 million, $2.1 billion to IBM, another $400 million to Blackstone. Anyway, that's a wrap for today. Call 505-322-7515 if you're still on a free trial and you want to save $1,100 a year. The price goes to $2,000 a year this Friday for the basic membership. And if you do upgrade, you'll get our Tuesday and Thursday trade alerts free for the next 30 days. So thanks for your time. And for those of you in the Diamond program, look for that Apple trade alert tomorrow. Thanks.